What is going on, everybody? Happy Tuesday. And as you could tell by the title of today's video, I'm going to go over how I used cumulative delta to spot a reversal on the 5-minute chart to complete the top step combine on the 50K challenge. And you can see by the balance up here that we got that done. Did it in 3 trades, 1 yesterday and 2 today, which we are going to go over right here. And one thing that I've been trying to do, just to preface why I now have this on my chart, is because I've been trying to either implement footprint chart or some book map features into my trading to better hold my winners longer and ultimately just increase the profits, but also have a better win rate too. So the only real reason that I wanted to install a footprint chart anyways was for the delta. And I like to play reversals, mean reversion, whatever you want to call it, and use that in my trading style. And I'll go over that a little bit in depth today, but that's the backstory as to why I instituted this onto my chart. So let's go over well, first, I guess we can go over the indicator itself, or at least the readout itself, and we'll go over this in a second. But you have the cumulative delta, which is basically the difference between the bid and the ask. And that is key because order flow gives you a greater insight and a bigger picture than just price action and watching volume along the way, just in terms of a histogram. Having the data and the numbers to see it makes it a little bit easier, at least for me, to say, hey, this is a bona fide move or not. The only downside to this feature on Tradeovate, by the way, is that you have to zoom in pretty high to zoom in pretty close to see the numbers. And as you could tell on this chart right here, it's not really the most advantageous or the most fun to look at, which is why on the left side of your screen, I actually have the 5-minute chart pulled up here with the 2-minute for 1 hours and then the daily charts. So I think we're gonna have somewhat of an inside day today. So better to be done sooner rather than later, especially with FOMC coming up. But let's get right into what I was looking at and why I took this trade. So as you'll notice from the morning, we had our EMA crossover through the VWAP, and we started to push down considerably. Almost down to the 300 level, which we ultimately hit, bounced off of, and pushed up until the open. But this was a pre-market trade that I took, and I someone who likes to play reversals, trying to catch the bottom is often a fool's errand, but with the cumulative delta, you can do that somewhat. And with this trade, you can see where I got in here, entries and exits, and the delta allowed me to do this by the following. So with this candle, we had just a 1 on the delta, but then we had a negative 51 and a negative 197. Okay, so you can say to yourself that if we're having a continuation move to the downside, the following candle should also have what is a higher delta. Should we be above 200, 250? The answer should be yes, but ultimately we had some indecision here between buyers and sellers with a delta of negative 35, even though we had a pretty decent candle move. So when the next candle opened up and I saw that we didn't hit the wick below this previous swing low and we started to push up higher, I ultimately got in right as we broke this candle's body, which was right here. And then we came up, and then as we tested the bottom of this moving average was when I exited for the profit here. And then we had a 94 close on the delta. So we had a positive 94 delta, which gave me continuation to hold this trade and not exit the trade, because as you notice on this candle, we immediately opened up at the close of this body and pushed right up to the moving average. We didn't retrace once down into this candle. Into this previous candle's body to grab further, orders, whatever the case was, to balance anything out. Further, the next candle closed, so that was 94. This candle closed at a 98. And then we had some indecision where we ultimately chopped going forward through the rest of the morning until we got to the 9 o'clock hour. But this was a little trade that I took here to get us through the threshold to the challenge completion date, which will be today. And we should be good to go. If I have to do a small trade tomorrow to make up any difference, that shouldn't be a problem with smaller size. But let's go to another example that is currently shaking out in the regular New York session here. This is a trade that I 100% should have taken, but did not. And this was a slam dunk trade because as you're looking at the 5 minute, let's jump over to the 2 minute quickly. You'll see right here on the 2 minute chart that we have a large amount of indecision in this range right here. And that's enough to chop you up, blow your account, lose your account. Trading options, theta is going to kill you. But let's look at this from a different perspective. You had this close above the EMAs and then this retest, and now you're off to the races, right? But how can you use the cumulative delta to see what order flow is doing? Because real time order flow is going to paint a better picture than the price action is going to tell you just by looking at it in face value. So as you'll notice here, we had a strong push down, right? We had a rejection from VWAP and the delta was largely increasing on the way down. I mean, decreasing on the way down, but the candles kept going further. Then we had somewhat of a relief, 324 positive, 84 positive, but the sellers pushed this thing down. Then we had another move, negative 718. And then here's where the fun part began. And this is why you need to look at higher time frames. Please go watch my previous video on why higher time frames are more important. But you'll notice that we had another move with negative 60 on the delta with a push down of positive 92. And the second this candle closed was when I would have gotten in. With a positive 92 here, look what happens following on the next two candles. 207 with a push up, 4012 with a retest of this body with a push up into the moving average. And then you would likely exit on, so you would hold from here, hold for 5 minutes, and then exit whenever we touched or crest above this moving average above this prior, I believe this would be this body's inefficiency right here when we tested that, because now we're starting to push down. But this is just two examples of how you can apply real-time order flow and cumulative delta to have better entries and exits in your trades and give you a little bit more confidence in your trade itself. Especially if you're playing any sort of reversions or reversals in your trading style, I think this is a big help. So, and I mean, looking at the volume profile, we're right at the bottom of the volume profile. But nonetheless, guys, that's all I have for today's video. I hope you found this helpful. Please give me a subscription and comment down below if this was a big help. And other than that, see you in the next video.